Okay, hello everybody. It's Market Michael here. Back with some data, back with some market data. Let's go ahead, get on with it. I just want to say overall, data is mixed, more showing a slowdown rather than mixed. You see we have one good number here. Wait a minute, no we don't. There's not one green number on this sheet so far. Pretty much almost every number, the only green number would be crude invents. Rate decision unchanged. That's good for the markets. Here we go. Two greens. We got that trade balance decrease. Okay, let's get into it, guys. So, first thing up on the list, productivity and also unit labor cost. So, productivity came in 0%. So, we have a 0.7 increase from last quarter, but we were expecting 0.8 increase. So, we had a miss there. I think that's for Q1. Okay, yeah, this is for Q1. I don't know why it says Q4. This is Q1. Okay, yeah, 0.7, that's what it was. Okay. You see in this chart here, unit labor cost is orange, productivity blue. Productivity is going down, unit labor costs are going up. So for this trend, we have productivity was actually negative last quarter. So now we have a 0.7 for productivity, which is really good. Most likely it's going to be downwardly revised. Unit labor cost is going to keep increasing. Now, when you usually see that unit labor cost increasing, we typically have a decreasing productivity level. The same thing with the unit for the productivity. Well, no, it's all based off unit labor cost. The cheaper you can get labor, easier you could be productive. So in 09, you see here, we were completely low. So what's the trend here? Higher lows, we are reversing and we are spiking to the other way. Therefore, productivity is going to decrease and weaken over time. That's what we're seeing. Trade balance, we're coming in at a positive increase to that negative trade balance. So we're at $49.0 billion versus prior $57.7 billion. The reason for that decrease, or increase rather, a better number in that trade deficit is because of we are lacking supplies. So we're all backed up. If we're all backed up, it's going to be harder for companies to move the goods. So we have to we have to import less and export less because there's a backup in orders. And whether you call it, they say backup orders are very high right now, but I don't know. It's really hard to trust the data. I don't believe what the government tells us. I don't believe this narrative they're telling us, so we're going to have to keep an eye on that stuff. Now we have here initial claims is decreasing, and that is a green number because when the amount of people looking to get unemployment benefits are going up, that usually indicates a recession. Now we can clearly see that in the initial claims chart on this Fred chart here. So 05, 07 we're starting to rise. Right now we're declining. I mean, we're experiencing very strange. Oh, but there was none in the 01 bubble. Wow. It just kept declining for 01. And that wasn't a recession then, I guess, technically. Very interesting, guys. and this 87 wasn't. It was just a market crash. It's possible that we get this market crash, and then it's gonna just spill over into into the debt market, and then we have a recession, and then shit hits the fan. I think this market bubble is gonna pop long before the economic bubble is gonna get interfered with. And if the Fed comes in, right, guys, if the Fed comes in to save the market, that's going to help the economy. They're going to lower raise rates. They're going to lower the rates to zero, lower the Fed funds rate, lower interest rates, start buying bonds on a massive scale, reduce the mortgage price, reduce everything, printing trillions of dollars, and that's going to help and ease the economy and help that move forward, possibly before it even crashes. Interesting thought. Interesting. In continuing claims, we're down a little bit. So again, these are positive numbers. I expect next month to be not as good. I expect May to be a little bit worse because we're teeter-tottering, we're seesawing, we're going up and down. So that's pretty much it for the economic data of this morning. We still have 10 o'clock factory orders, ISM services, nat gas invents as well. Overall, we might not be able to drop, guys. Just looking at this, it doesn't really look right. Actually, no, we should be able to. And we should be able to puncture the areas necessary. And that's what it's all about. It's about creating lower lows and continuing a bearish pattern. Because when the market picks a direction to go, it tests it, guys. It tests it. We've been testing this downward momentum for a long time. You had two options. Listen to CNBC or Bloomberg, or listen to guys like me. Guys like me are going to tell you the real story. Once we had this dip on the comp here, I thought this was Dow. If we had this dip, we made a higher high, but I was like, nuh-uh. And I swear I called the top on this. And I have a video on it. I called the fucking top. You know, I saw that we were continuing this trend, and I saw we were peaking out on that MACD, CCI, RSI. Boom. 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 Breaking support. Even on a 4-hour chart, guys, this isn't looking good. On that /NQ, we just got a parabolic SAR on top, and that is indicating a reversal to the downside, and it absolutely looks like it. We had two of the weakest little moves I've ever seen in my entire life, and it looks like that this trend is going to continue below that MACD line, below that Trix line. So these really technical analysis, the technical analysis for the indices are not looking good at all. I want to show you general markets because we love gold, silver, Bitcoin, crude, dollar. It's all good stuff. Let's all get into the fun. Check out gold there, dipping below a little trend line I put, but still is within a major trend line. Still within a major trend line. Silver is in a major trend line as well. I think we're going to have to break above 17 at one point and then switch to the upside. I think that's probably going to happen too with gold. We're going to stay above at this 1370 mark. And once it's switched, guys, we're just going to have to remain up there and then wait for that initial breakout be gone. I think we're just in this channel. Right now we're trading to the downside, which isn't necessarily good. That means markets aren't ready for a breakout in precious metals, either because they're being suppressed or the market isn't ready to take a turn yet. Those safe havens aren't being played yet. Okay, short term, the dollar kind of peaked out here. I'm very curious to see what the dollar's going to do. It got higher lows. It very well it may very well continue up higher. On a daily chart, we are peaking out, but we started to lose some steam. Very curious to see what the dollar's going to do. I would say it can't hold this 92 level. You never know. It totally could. I just think this is a sucker's rally, and that's that. So let's go ahead and pull up some interesting plays like Bitcoin. Bitcoin is pretty much flat. You know, we could pop up to 10,500, then come back down. But I think we're coming down, but it is possible to pop back up. Let's check out Sweet Crude. Again, we're at a little negative run, and we haven't moved anywhere. I mean, that's a pretty solid sign that I thought we were gonna have to test this 66 level. And the fact if we don't even get to that 66 level, it's a sign that the markets are, well, that oil is just insane, is on an insane bull run. Look here. Oh, I thought I had some fibs set up. I swear I did, guys. I swear I had some fibs set up, but I'm pretty sure we're going to 80, and I'm pretty sure that's where the fibs told me we were going. But I think we need to get some support. We might even get support here, guys. But I thought 65, 66 was a great region of support. Check it out, 65, 66. Look at where that horizontal line's going. That's previous resistance is future support. So now let's go ahead, pop up that 10-year. Pop up the 10-year, 2-year spread. Whoops. So we ended up going to 0.45. We've bounced a little bit. Interesting to see this bounce. All the indicators are telling me that we're curling up. I have a suspicion that we might end up failing a 0.5 breakout. We might get that 0.5, 0.51, 0.5, I think, but I don't think we're going to get over, and I think we're going to continue downwards. We shouldn't end up getting it. This should just be a little bounce up. The markets are what this TNX is coming down. I mean, 10-year, 2-year spread is coming down. We are bouncing. Shoulder, head, shoulder. So, coming down. And that 10-year, guys, it is not really looking good. We are getting a lot of selling this morning. I think the pressure, the parabolic bar on a daily just switched to the negative. So I think we're gonna have to get to that 28.9 level, fill the gap. We're already at this gap here, so we're gonna continue to go lower to that 29.0 level. Gold's backing down a little bit. We spiked off Major League, but potentially I think we're gonna get this 13.17 break, 13.20 support. We're gonna have to wait and see. Overall, these markets are looking interesting for a day of trading. I still think it's gonna be negative in the long run. You know, I've been warning everybody about this. I think we're just going to have a market crash that's going to escalate into an economic failure. And if the Fed doesn't do anything proactively, then markets might just end up failing as well as the economy. So not only does the Fed create massive areas in the economy where malinvestment is rampant, it's also not fixing the solutions fast enough, fixing the problems fast enough to where they can actually be effective in helping. Well, this has been a quick 15-minute video. Get this out before the open. At 10 o'clock, we got some information coming out. So at 10 o'clock, I'll start the video. 10:30, 11, I'll post it. Thank you very much. Market Michael here, and I'll talk to you later.